Well, good morning, subscribers and friends of YouTube. The last 3 days, including today, gold has smashed all record highs. Every day, basically, it has done so. And of course, along with it, silver has been up very nicely. Yesterday, it was up over $2 or so. Today, I'm not sure the exact high, but it was probably close to around $1 up. Or 89 cents, something I don't remember right now. They're definitely doing very well right this second. I know when the high of today, I think for silver was somewhere around $39.48. So we're a stone throw away from $40 again. And if you recall, it only barely touched into the 40s, and then 48, 49, and then it started going way back down, 40s, 30, 32, 33, 35, whatever. We're already back in the 40s. I told you to be patient. I told you, don't let this get to your stomach. Don't feel sick like, oh my God, I just spent 45, 50 bucks, whatever you spent on silver. I was telling you, if you don't have any, get it. Because I wasn't one of the ones saying, oh, it's definitely going to crash. I've never said that. That doesn't mean it can't. Because as I've said before, look at the Great Depression even. Even though you've seen heavy market crashes then in most stocks, they didn't just go straight down. There was little blips up and then down. This is basically a blip down for silver and gold at the same time, because gold got hit too, but silver more so. So here we are. Silver's basically at $40, you could say. I mean, it was $39.48 or so for the high today. Last time I checked, it was still just over $39. It's going to be getting back, as I said, to that $50 price range. Again, if you call APMEX right now, ask them what it costs, or go onto the website even and figure out what it costs, you're going to spend about $7 over spot price, plus the shipping and handling fee and all that crap. Even on eBay, you can go look. You're going to spend about $7 or so over spot price for the Silver Eagles or the Canadian Maple Leafs. Those are the two coins of choice, especially the Silver Eagles. So if we're sitting at practically $40 right now, add $7 to that, there's your premium, $47. That's what you're going to pay right now. I have not even visited APMEX site today just to see, out of curiosity, what are they selling them for. But I would venture and say it's probably $6 or $7 over spot for the Silver Eagles, if I had to guess. But again, I haven't looked today, so whatever. So I want to read you this story. Oh, and by the way, remember I'd mentioned, don't be all uncomfortable with the price of silver low, but it's a buying opportunity. Use it as a buying opportunity. It's going to be going back up. So that all this was a thank you to the bankers, JP Morgan and friends. Thanks for dropping it down to the 30s again, because I got to buy some more, which I did twice, by the way, 2 separate episodes. And I did get caught buying, I think, 20 ounces or maybe 25 ounces, I can't remember, when the price was like $43 or $44. Cost me, with the premium, of course, it was about 50 bucks that I paid. But that's the highest that I've paid for silver. And am I upset that I paid that price? No, heck no, I'm not, because it's going to be blowing by $50. It's going to be blowing by the $75. It's going to be into the $100, and then of course it's going to go higher. And I'm not saying how soon that's going to happen, because I don't know, and I don't claim to know. But what I did claim to know, based off of Lindsey Williams, 100% accuracy, knows an elitist oil guy who tells him the agenda. And as we all know, somebody is controlling the markets, somebody is controlling what happens across the world, when wars get started, the price of oil, all this stuff. And he actually relays the information to Lindsey Williams and is always right. And I told you, oh hey, Lindsey Williams came out recently. I did this a few weeks ago. Hey, Lindsey Williams came out recently. Guess what he said? Silver, he did mention silver, gold going to $3,000 an ounce. And he also mentioned silver will be going to $75 to $100 an ounce. He did not say exactly when that would take place, but as a matter of fact, he did mention something about September, roughly that general time frame of this year, 2011, in which we would see a 20 to 25% increase in silver. He didn't mention if gold would also increase that amount, but it probably will if I had to guess. But maybe, who knows, whatever. Doesn't really matter. They're both going up. So if you just calculate this week alone, we saw, I think, silver in the 35 range, right? for sure last week, Thursday or Friday or whatever, we did. So if we have silver at the $35 range just days ago, and we are now at $39, and as a matter of fact, I didn't do the exact math right this second because the high today was $39.48, but if you want to do the math, I'll tell you right now, in the last few days, silver has risen over 12%, approximately 12%. Just to be safe, I know it's 12%. It's probably just 12.2 or 12.3 or whatever now that, you know, it actually hit 39.48 cents. So we'll just be nice and call that a 12% increase. Lindsey Williams told you on or about around September we would see 20 to 25% higher prices in silver. Now, I also watched a video again this morning when he was on Alex Jones, and in another interview, what I just told you he said is what he said. And I noticed in the Alex Jones interview, he said from between around September through December, we'll see that 20 to 25% increase taking place. In the other interview, which I think was with that guy SGT Bull, whatever, I'm pretty sure it was in that one where he said around September is when they'll do this. And again, with all the information that he's talking about, it could have just been a simple slip of not, around September. If it's October, are we going to be upset? If it really kicks in November, are you really going to be upset? Because he did say it would be around September. That's fine. Don't stick every single word he says under a magnifying glass. And well, one video he said September. The other video he said starting September and the next couple months out. And the other video he said September to December. Doesn't matter. Settle down. If there's people out there that really care about the fine wording. But someone had messaged me today to ask, hey, can you double check that he said it's September? Because I thought he said it would be September to December or something like that. And I was like, no, he said September. And then I went and found the Alex Jones video, which I didn't listen to, that I was referring to. I was referring to a couple other interviews he did elsewhere. And I was like, oh, sure enough, he did actually say September through December, we'll see that 20 to 25% increase in silver. But the other couple of interviews that I saw, he just mentioned the word September. So again, this guy is in his late 70s or whatever. He's old. Maybe he's even in his 80s now. I'm not even sure for Lindsey Williams. He's not perfect. He's just speaking to give you information, just like anyone can make one little tiny slip up of, repeating this story a million times and telling this whole great story along with it. Maybe he said September one time, maybe he said starting September one time, and then maybe he said September to December another time. It really doesn't matter. Bottom line, why I'm telling you this is because, for God's sakes, we are at the halfway point of his prediction for starting at September or around there. We're still in halfway July. July, August, end of August to September will be a month and a half from now. And today, we're already at the 12% prediction level, or whatever you want to call it, of his 20 to 25%. So we'll call it 24% for easy math, right? 12% times 12 plus 12 is 24. Therefore, we are at the halfway point of where he said silver is going already. Do I think they could push it back down in the time being over the next month? Without a doubt they could. There's no telling. But I want to read you something from our boy Harvey Organ today. And I think this may have been posted yesterday on his site, which supports the banksters getting a little nervous and running scared somewhat on their short positions. He's got a whole thing to say, but I'm not going to read all of it. Again, I'm not plagiarizing his whole page. And I'll link to his website in the comments below, description below. And he says, 1, the Central Fund of Canada, it is trading at positive 3.7% to net asset value in USA funds and positive 3.8% in net asset value for CDN or Canadian, I guess, funds. Sprott Silver Fund, and I believe that's Eric Sprott, owns those funds, that in gold, or it's called the PSLV. Premium to that net asset value rose slightly to a positive 19.71% to net asset value. We'll call that NAV. And then Sprott Gold Physical, which is the number, or the short is PHYS. premium to NAV rose to about to a positive 5.0% to NAV, and this is as of yesterday. And he says the Sprott Silver Fund still commands a huge premium to net asset value, or NAV. I'm assuming that's what he's using for NAV, net asset value. The bankers are afraid to tackle Eric Sprott. The Sprott Gold Fund now commands a nice premium of 5.07%. Finally, I can safely say that the banking cartel are running away from their massive short positions at the Central Fund of Canada, as this vehicle has finally entered into the positive to NAV arena in quite some time. This will be exciting to watch in the next few weeks, and it will be. So he would also say, I'd like to highlight the big stories of the day. The first is from the UK Telegraph. The author is Richard Blackden, and it highlights in detail the risks facing the USA if the economy does not pick up. And as I said, you know, call me a doomer, whatever, I'm just telling you the truth. I don't play games. There will not be a pickup in the economy. There will not be a pickup in the unemployment levels to a better level. There will be a pickup in those numbers of worse amounts, sure, but there's not going to be better data supporting, oh yeah, we're definitely turning around, this is good news, oh yeah, we've come out of this recession. No, as I said the other day, this recession that started in 2008 is the beginning of a massive depression. So if they want to be fair, no, don't use that D word on TV. Newscasters, everybody, don't use that depression word. Don't use that D word. Use the R word, recession. It's less impacting, and that's what it is right now. Okay, well, let's call it that. That's fine. But in the near future, it's going to be called a depression of mass proportions, just to people tied to the US dollar, which is probably at least half the world now. So it's be a little hurting going on for everybody. So this article, US Fed Reserve faces split if economy fails to pick up. The Federal Reserve risks a split over what to do if the US economy fails to regain momentum, minutes of its last meeting suggest. It's going to fail to pick up momentum, as I just said, and have said the other day. The economy will not be turning around to any recognizable good level anytime in the near future, and as a matter of fact, yes, it's going to get worse. And I hate to say that, because I could lose my job. People watching this video right now could or already have lost their jobs, and that sucks. I don't want that on anybody. So the minutes of June's gathering of the Federal Open Market Committee, or FOMC, the body that sets interest rates in the US, show that some officials believe fresh stimulus may be needed or need to be considered, while others estimate that the risk of stoking inflation is now too high for such actions. The FOMC last month ended its controversial policy of quantitative easing, QE2, which again didn't even come into this country. It went straight out to the main banks in other countries through the subsidiaries that are sitting on our soil who got all that money, to say, yeah, it went to American banks. Well, not really. It went to European banks that were sitting on American soil and funneling it right back. That's what the data shows. This isn't conspiracy. So, anyways, so they ended their policy last month of quantitative easing, in which the central bank would buy $600 billion of government bonds from banks and insurance companies in an effort to keep long-term interest rates low. Ben Bernanke, the chairman of the Fed, indicated in April that a further bout of QE quantitative easing would risk triggering inflation. In the minutes of the meeting of June 21, 22, or 21st or 22nd, released yesterday in Washington, D.C., the central bank said that, quote, the committee might have to consider providing additional monetary stimulus, especially, keyword, if economic growth remained too slow to meaningfully reduce the unemployment rate in the medium run. Again, he's telling you what they're going to do in advance. We already said they would do this. We know how it ends. It's simple. Again, my example. House is on fire. Fire department shows up with massive barrels of high-octane jet fuel to douse the fire with to put it out. Wait a minute. You're putting out a fire? Yes. With jet fuel as the tool to put it out. Yeah. And then look at you with a straight face like that's normal. Yeah, of course. Huh. And then the sheeple will believe him. Well, he is the fire department. What do I know? I don't have any critical thinking skills. He's putting a fire out with jet fuel. He's going to set the whole freaking building ablaze. Get the heck out of here. Run for your lives. And then, of course, I'm the only one who runs. Oh, me and Pastor Dowell and some of his people in his community, and like 1 or 2 people I know, we run away. And everyone else stands there. Oh, I trust the government. I trust the fire department. They wouldn't lie. I mean, we pay their tax, their salary with our tax money. They have a right and duty to tell us the truth and protect us. I'm not going anywhere. And then they all wind up dead because the whole building went up, as we predicted. And then when we stand back and say, yeah, we predicted this, but wait a minute, we're not some future seers. Any bozo clown could predict what we predicted. Therefore, when we say QE3 in some way, shape, or form or another will come out, he just lets you know right here, we may have to do it. Actually, even though we promised and said for sure, based on the data at that time, it's looking good, we don't need to do it. And all of a sudden, a month later after speaking, you know what, that whole month showed data that says, we might have to actually stimulate the economy some more with QE3. So you didn't see the data in 1 month time span, it was looking good, and then all of a sudden 1 month later, it's just sour, it doesn't work anymore. Right. They're lying to your faces. That's all this is. They know darn well what they're doing. Did you hear Ben Bernanke's voice crackling as he spoke? And Ron Paul asking him, is gold money? He had to pause for a second and think, I better answer this right. No. No? Ron Paul says, why are you hoarding it as a central bank? Why do central banks hold it then? Why don't you hold, I don't know, diamonds? Diamonds are a store of wealth. It's just tradition. It's just traditionally that's what the central banks do. Right. Central banks are holding gold because they know the next currency that comes out across the world, whether it's one world if they can pull it off, or it'll be central to just the different countries and their own currency, they already know they're going to have to back it by gold. That's why they're hoarding it. And remember what the Webbot said, that there's going to be one central bank in particular that all the other central banks didn't know this one was doing it, and they were hoarding, stockpiling lots and lots of gold. And it doesn't say which one, but if I had to guess, I'd probably guess maybe ours, the Federal Reserve, but maybe not. It's just some central bank is going to be holding a massive amount of gold, and it comes out later. None of the other central banks ever dreamed of holding so much gold, and that central bank in question never told anyone they were doing it either. It was kind of secret, and the secret is revealed. That's later on in Webbot land, so that hasn't happened yet. So, hopes that economic growth would accelerate in 2011 have so far been disappointed, or disappointing as what it should say, as the rising petrol and food prices that have marked the first 5 months of this year hit U.S. consumers. The optimism was dampened further last week by the employment report for June that showed the U.S. economy created just 18,000 jobs against expectations of 100,000 plus. Boy, that's a pretty far shot that you missed there, wasn't it? But I bet when they said, oh, we expect 100,000 jobs to be created next month, right? The previous month before that, the stock market probably rallied. Yeah. And then the truth comes out. First of all, it was just someone saying probably that's what we expect. And then the truth comes out later, 18,000 jobs cut. Boy, that's a pretty far mistake. That's like calling for a hurricane to, land. You can see it and land. It's coming on radar. Hurricane will be here tomorrow, and then all of a sudden it just goes away overnight. Just disappears. That's how far off that is. Nonsense. Few now on Wall Street think the world's biggest economy, USA, expanded at much more than a 2% pace last quarter. Right? So few on Wall Street even believe that nonsense, that it expanded at 2% last quarter. However, any move by some members of the FOMC to unleash further stimulus is likely to run in opposition from colleagues. The minutes noted that a few members viewed the increase in inflation risks as suggesting that economic conditions might well evolve in a way that could warrant the FOMC taking steps to removing policy accommodations sooner than currently anticipated. The release of the minutes comes amid the increasingly fraught talks between Republicans and Democrats in the White House over raising the country's $14.3 trillion debt ceiling. The FOMC said failure to strike an agreement would be like causing severe market disruptions and could also have a lasting effect on U.S. borrowing costs. So we had yesterday, had Ben on the Hill testifying, right? And as he says, and one of the questions, Ron Paul was asked him simply this: is gold money? His response, no. I will slap his mouth loose for saying that. It is amazing that the Fed are certainly using gold as money, as they use gold swaps for currency and leasing of the metal for currency. For gold to be money, it must have these six attributes: a store of value, in other words, rare. It must have value on its own merits. Paper money is nothing but a piece of paper derived from bark of a tree. Paper is fiat, value by decree. 2, it must be fungible. Each unit of weight is equal to another equal unit of weight. Diamonds are different and therefore cannot be money, but they are rare and valuable. But again, it doesn't meet the requirements of being money. Divisible, number 3. It must be divisible into smaller parts and easily tradable. Gold is easily malleable and can be cut into smaller, tiny pieces. Number 4, it must act as a medium of exchange. Gold can surely act as a medium of exchange like paper money, but paper money has none of the above attributes. Therefore, it doesn't meet the qualifications, technically speaking. In 6,000 years of history, as Ron Paul told Federal Chairman Ben Bernanke, 6,000 years of history plus says that gold's money. But you're saying it's not. Correct, it's not. Right. I got my money on ancient civilizations, on people of the past and history of the past, before the New Age Roman Empire nonsense we're living today with paper money, digidollars, creating debt out of thin air, etc. Number 5. It is easily recognizable and difficult to counterfeit. Paper money can easily be counterfeited. Gold is harder to counterfeit, yet it can be counterfeited by sticking tungsten in the middle of the gold bar and then plating it with the gold outside so it weighs the same and nobody knows better unless you cut into the bar. Which, by the way, we've already heard of a few cases of that a couple years ago, and last year, maybe last year was one of them, but I know in 2009 for sure. And Hong Kong got these in from somewhere, and they never said where they got those bars from. And if I had to guess, yeah, I think we know which country probably sent them those bars and promised to make good, just don't tell anybody. And anyways, if we come to find out, which according to the webbot, we're going to hear some more of this, definite fake gold out there. Therefore, the real gold that's out there has just skyrocketed even higher than the already skyrocketed price that your crazy jaw-dropping mouth was looking at, goes even higher because news of these fake bars hits the fan all over the place. So those of us holding the real deal, the real McCoy, we're sitting even more pretty than we thought we would be. So that's a plus. Number 6, it must be easily transportable to be money. Here is a famous quote, and again, you could put coins in your pocket, right? You could put 1/10 of an ounce of gold, 1/4 of an ounce of gold, 1/2 ounce of gold, a full ounce of gold, etc. Even grams of gold. Here is a famous quote from a banker, and that banker is none other than J.P. Morgan, the J.P. Morgan from back when. Quote, "Gold is money. Everything else is credit." J.P. Morgan. Hey, he's actually right. Credit is created out of thin air, debt to you. It's called credit, but it's debt once you get it. It didn't come from anywhere other than the ether, outer space. It was created on a computer screen, and then you have to take physical dollars to give back. So you're always in debt, trying to get out of debt your whole life. And very few people are lucky enough to actually get out of debt and stay out of debt. And even when they do that, they're already, 50 years old, 60 years old. I'm ready to retire now. Why does it take so long to get out of debt for most people? And most people at that age can't say that they're out of debt completely. Oh yeah, I still got a mortgage, or I still got this, I still got that. So this is crazy. So anyways, I think that's all I wanted to read to you. And I gotta go. Hope you enjoyed that. Take care.